Welcome to another episode of Let's Talk Crypto, the live stream where we talk about crypto news and price action. My name is Mike. All right, guys, in the last little while, we have been seeing the crypto space come down to much lower levels. Of course, we saw Bitcoin coming down, Ethereum. Guys, this is the monthly. We're looking at a heat map that shows this the monthly chart. And of course, we've been coming down significantly in the crypto space. Now, the question is, should we be buying the dips? You guys know here on the channel, we don't mind up, down, bearish, or bullish. It doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, today is a pre-record, not a live stream. Of course, I'm usually live almost every single day at 8 p.m. EST, but today we're going to be talking about a narrative. Narratives, of course, are a big part of the way we can structure our portfolios. And as we see the market come down in the last month or so, we saw, Bitcoin coming down, Ethereum, particularly the altcoins, Ethereum down 25%, while some of the altcoins are back to bear market bottom prices. Leads me to believe this is where we need to focus a little bit. It doesn't mean that we can't take a bit of risk. Obviously, we see lots of red. This is the best time usually to be buying the dips. But also, we start to question, what dips do we buy? There are many, many ways to structure a portfolio. One of them is by looking at various narratives. Now, in previous pre-records, it did focus on other narratives. Of course, the gaming narrative, the real-world asset narrative, the DePIN narrative, all very, very hot narratives. And today I want to talk about the AI narrative. AI is definitely a big part of what we've been seeing in the last little while in the crypto space, a lot of the bullishness that we've been seeing. And of course, it's very intertwined with many other narratives. Of course, DePIN, real world asset, even gaming. And this is the thing that we got to understand is that AI in general, from a tech perspective, can be very, very, intertwined. And that's a really healthy thing, of course, for the narrative, because there's a lot of utility. Now, if we go on CoinGecko, we can look at the overall collection of AI projects here within the overall market cap, and you can see that there's a lot of AI projects here in the category itself, right? There's a lot, and generally speaking, as we've been seeing the market come down a little bit here, it's not a good look for all narratives, not just AI. So if you look at the overall narrative in itself, we can see that it's been kind of sideways. It's kind of been boring. If you look at the top 10, the top 20, look at the top 100 projects, you can see it's very, very sideways. It's not just AI though. It's not exclusive to AI. It's pretty much all narratives out there. Now, we do have some good trending narratives. Of course, we have a BitTensor, a beast in this project, in this narrative. We have Render, of course, that so many people have been loving and seeing a lot of good gains out of Render, and its in its involvement with Apple, which was a very hot one and caused a lot of good volume to the upside. But generally speaking, what we have to understand is we need to see the market in general wake up. We need to see the market as a whole wake up. And when that does happen, we're going to see these hot narratives also get some volume. Ideally, we start to see, of course, AI do very well. Now, like I mentioned, which projects are we going to scale into if we're looking at from a narrative perspective, right? There's a lot of ones that are buzzing around, but we can also take it to the next level. Start looking at market cap, because market cap is also an opportunity to diversify, right? We diversify based on narratives and market cap. Those are two decent ways to diversify. And obviously diversification via, your capital is also very important, but these are also very important topics. But let's focus on the market caps, right? And obviously, let's focus on what people are buzzing about, the community in general. We know Near Protocol is a heavyweight, right? The market cap is pretty large right now. We're talking about a $4.3 billion market cap, which means that, look, how much more gains could we get out of Near Protocol? It's very possible that we see some good gains out of Near Protocol, of course, getting to multiple $billion. It's all very possible. Near Protocol, very associated with NVIDIA, which is a very, very bullish thing to see that relationship grow and flourish over time. However, in the last little while, we have been seeing a bit of a dip in the market. Near protocol coming down a little bit in the last 7 days. In the last 24 hours, 7.4%. So, but nonetheless, let's look at the structure in the last 7 days. Pretty much sideways, sideways, sideways. So we can take a look at near protocol. Let's see. Let's put this one on the list. We'll take a look at some of these charts and see if we can, and I'll give you my 2 cents from a fundamental perspective as we go along. I'm also going to focus on projects that are primarily considered AI. ICP, although it is a bullish project, it does have a facet of AI, of course, and many projects do. I wouldn't classify ICP a traditional AI project per se. It does have aspects and introduce characteristics of AI within the ecosystem, but because it's a large ecosystem, but it's not AI particularly. Now, FET has a different story behind it, right? Because it has transformed or amalgamated itself with some other projects, right? We talked about Ocean, FET, and there's another one, I forget right now, Singularity, I believe it is, Artificial Super Intelligence Alliance. It's an alliance of those 3 projects put together, and ultimately, it's a pretty large market cap all of a sudden. So we'll take a look at FET, see what's going on there. We'll take a look at Tau, of course. Tau, why not? Everybody talks about Tau. We'll touch upon Render, just a quick look, because a lot of these heavyweights are very clear, very, very clear. Are you still bullish on their fundamentals? Because they've been showing good strength in fundamentals. Now, keep in mind that I did release a deep dive on Tau, on many of these projects for that matter, particularly Tau. That's when, I've been covering Tau really, really early on, and I like the fundamentals, and they're all good. And if you want to know a bit more about Tau, what it's about, check out the deep dive playlist on the channel. I have about 60 deep dives already accumulated over the last year, where, I've been looking to a majority of the details that we need to get fundamentally bullish. And if you want to be a part of that process, where you want to recommend deep dives and vote on all my deep dives are voted on by the community, join the Discord. And obviously you can, in that Discord, there's a channel where you can, request different deep dives and vote on the deep dives that I release every Sunday. Okay, so keep that in mind. So Render, we have, what else? We have Akash is a good one. The market cap we're getting down to a $600 million market cap. So it is, I would say, a small market cap, not medium small. It's not a tiny market cap. It's not a micro cap. Once we get to the $500 million market cap, it's considered small, could do very well. Of course, a nice 10x, very, very possible for Akash, not a problem. And I like to be very modest with my targets, because once you get a bit greedy, that's usually where you get, a bit of pain, right? You don't want to be greedy in this market. You want to be realistic and, hope for the best and prepare for potentially the worst. But the best thing to do is have a plan for the more possible scenario. It's all about statistics. So Akash is a good one. Why not? Let's see what we got there. I'll put it on the maybe side. Akash is a good one. See how we can cover a couple of these. Now, we got AIOZ, a lot of people talking about that one. We'll put this one on the maybe as well. We got to choose a couple. We can't cover them all tonight, but we'll go through a few. And Origin Trail Track, that's an interesting one. The price action's looking pretty decent. You got to admit what's happening with Track, Origin Trail. Maybe we'll put that one on the list as well. I like to see, obviously, price action, married up with good fundamentals. I would say Singularity, AGIX, not Singularity, Cubic. Cubic, is it completely an AI project? No, it is. So no, it isn't. So I would move on from there. People were talking about PAL for a few days, for a few weeks. Moving on from PAL, I'm not really interested. Ocean Protocol, again, amalgamated with the FET narrative. So I would definitely, reconsider and do your research with regards to that merger. That one. Nosana, a lot of people talking about this one for a bit, and that's quite interesting to me, because now we're getting into a lower market cap, 120 million, but we see Delysium right nearby, $120 million market cap. That is where, for me, is a sweet spot. Between 50 and 150, that's pretty good. I like those zones because I'm taking enough risk based on my risk profile. Every trader has their own risk profile and tolerance to risk. And I'm a little bit of a degen, I'll be honest. I like the low risk. I don't mind taking a bit of risk, and I don't mind holding a few large caps. Like I hold Near Protocol, no doubt. I hold Near Protocol, but I also hold a fair amount of low cap projects, because I know know that's where the volatility is at. And if you're a trader, you want volatility. You want your projects, you don't want the price to stay sideways, or else you can just stay in USDT. You get what I mean? So we got to be very, very clear on what volatility is and how we can use it to our advantage. So what I'm going to put AGI. And let's put Nosana on the list. Why not? Let's put Nosana. I have a few already going here, but we'll see how many we could cover. I'm going to kind of bounce around this list when we get into it. What else do we have? We have IQ, Netmind, another one people are kind of buzzing around a little bit. I don't want to cover too many here. Based AI, I might as well give you my 2 cents on Based AI. I did a deep dive on this one, and I'm going to try to recall some of the details that I covered because it's been a while, but nonetheless, I will take a look at the charts and we'll talk about some of the things that people are chatting about. Fala, one that a lot of people are buzzing about. I've been getting a lot of requests, a lot of chat about, a lot of buzz about Fala, so might as well talk about that one. Why not is the ticker. And as we go down, what else is there? Anyone? LimeWire, I don't think that's a completely AI project. It could be decentralized storage or peer-to-peer network type of thing. This is the OG, but again, a lot of these projects, because they have AI introduced into them, they're able to qualify to be part of this narrative. And I want to be really clear on that we got to be, for example, Octaspace. Yes, it's a DeepIn. However, the DeepIn narrative is very intertwined with AI. Why? Because if it's DeepIn, most likely it is graphics, processing power, GPU decentralization, and ultimately those GPUs can be used for AI, not just for rendering graphics. Whereas Octa at the current moment focus primarily on rendering graphics, and of course it can be used for AI. I would like to include Octa into this narrative, but I will not, because I feel like there are other projects that are full front and center of focusing on AI, and I'm going to do my best to kind of find those for you guys. We have neural AI, not bad of a scenario here. We have a lot of people talking. Dynex is another one. I think this could be a good one as well. Decentralized DeepIn and all of that, AI possibilities. I'm trying to be very selective here as we get to the bottom of the range here. Chlor AI is a big one. I would say Chlor might be a good one. Let's put this one on the list. I remember about a month or two ago, people were buzzing about it, and all of a sudden we're at a $23 million market cap. And, we also have Lithium.im. Again, another good round of buzz around that one. So we're definitely packing in the list right now. Let's get going and let's see Lithium. Let's look at Aleph, L-E-F-P-H, L-E-P, yes, A-L-E. ph.im. What else? I think that we're good here. 01 Labs, DEAI. I did a deep dive on this one. It's not bad. There's some things that are obviously a concern. We're getting to lower market caps. And keep in mind, as you get into the lower market caps, right now we're talking about $15 million market caps, okay? We have to understand that a lot of these projects are in the works. They're new, they're fresh. They're not going to have all the fundamentals all lined up perfectly. And of course, because of that, there's risk associated. And of course, if there's risk and there's reward, it might be still a good viable option to deploy and to have a bit of a position. Just keep in mind that new projects are still in their infancy and they still have a lot of work to do with regards to fundamentals, primarily the way they introduce the project. I've noticed that there's a big correlation between market cap and of course size of the project and the longevity, how long it has been in the market, and with how they make their product market fit, right? The reality is if the white papers and all the fundamentals are not clear, it does cause a bit of an issue with the retail investor getting comfortable to deploy capital. So we got to put a bit of pressure on these projects to step up their game with regards to their website deployment and their white papers and perhaps even their social engagement to make us fundamentally bullish. When we got questions, there should be a team member, somebody that's senior there, ready to answer and engage pretty much. Okay, so I think we got some good ones. Look, we can get into a lot of these low caps for sure. There's a few others that come to my mind, that are not going to make the list, of course. Right. Open Fabric AI, definitely a one that people are buzzing about. We can put it on the maybe list, or maybe we can talk about it tomorrow, or something like that on a different live stream for sure. There are many ones that are looking pretty good, like DEAI, of course, another one that I kind of skimmed over. But we're gonna have to pick a few. All right, guys, let's move on. Let's take a look at some of these. Before we do that, let's take a look at what's going on with Bitcoin, because really, Bitcoin at the end of the day is going to be a great leading indicator. And at the moment on the daily, we're still in that structure. I'm not going to spend so much time here, but we can see that Bitcoin ultimately is basically holding up the market pretty nicely within the structure. You know, a lot of people are getting bearish right here that we could be rolling over, coming down to hunt liquidity at about 25,000. Could be very possible from a big picture perspective, but we still have to understand the cycle, right? Where we're at right now. This is a make it or break it moment for Bitcoin, for the crypto space, for the bull market in general. If this turns into a nice bull flag or a nice retracement before another continuation where we see Bitcoin start to run, guys, this is the last opportunity really, because if we lead into, you know, the new year without a major run, people are going to start to lose a lot of interest in the crypto space, and it could be that we roll over and come down to about 25 and that's done, right? And then of course we got to, you know, lick our wounds and move on and figure out what we got to do, because ultimately that's the name of the game. We got to prepare for the worst but prepare for the best. So we're looking for Bitcoin to make its next impulsive move, and based on that theory, what is Ethereum doing? Ethereum, the reality is, as the main altcoin out there, we want Ethereum to lead the way, and really it did leave the station. It left the bear market bottoms, but you know, and it did kind of come up to, you know, the tops, but it didn't really break above the previous high like Bitcoin did. Didn't even attempt to get into all-time highs or get into price discovery, guys. Ethereum did not. So it's a little bit undervalued in my book. I think Ethereum is lagging behind Bitcoin still, and it's very likely that we see Ethereum start to wake up here and still catch up to Bitcoin, while all the rest of the altcoins in the market and all the rest of the narratives catch up to Ethereum and Bitcoin, the heavyweights. Of course, this is something that we have to understand. And a quick touch on the Bitcoin dominance. Bitcoin dominance has been doing very great in the last little while. Remember, this is the weekly. Ultimately, we want to see the Bitcoin dominance roll over and hit about 44%, and then obviously break this cluster right in here and start getting into dip discovery, where we see altcoins catch up and show some strength in this market, because ultimately Bitcoin, based on the law of diminishing returns, Bitcoin eventually is going to slow down. We have to understand. But the altcoins bring in an entire tech market, an entire tech industry alongside with it, whereas Bitcoin is a commodity. We get it. And I know Ethereum at the current moment is kind of considered a commodity as well, which, you know, for that matter, because it's so decentralized to a degree, obviously, it does represent like a commodity does, right? But we have to understand is that an altcoin, especially when you start introducing technology like the smart contract, provides other use cases way far and beyond what Bitcoin offers, and we have a lot more opportunity there to introduce capital into that into the industry based on the altcoin market. So I feel like the altcoins, they offer a lot more utility, of course, a lot more utility, and obviously because of that, there's going to be a lot more opportunity to make more gains leading into the future. I like to reflect on that and to start to think about them as penny stocks in regular traditional economics, right? Marketplace. The reality is they're penny stocks at this level. There's small startups that could get acquired by heavyweights. They could get amalgamated and joined together into alliances and so on and so forth. So we're getting in really early on this innovative tech. And this is what I feel that altcoins eventually as an aggregate, will have to outperform Bitcoin altogether, because Bitcoin in itself is great, but really we're talking about an entire industry when we're talking about altcoins, if you follow what I mean. Guys, I do have a background in computer science. I understand the way the industry works, and I do see the value in Bitcoin as a store of value, definitely very valuable, but ultimately it's the tech that really has a lot more opportunity when you're speaking about altcoins. All right, guys, let's move on. Enough about that. Let's take a look at what some of these AI narrative projects. Now, Near Protocol. The reason why I'm covering Near Protocol, really, traditionally, if you look at previous cycles, Near Protocol didn't really align itself to AI. In fact, AI as a narrative didn't really exist. However, because of its integration or its involvement or its relationship with NVIDIA, it's starting to really look like it could be an AI project or a layer one that focuses on AI. And what it really intrigues me the most is that all of a sudden they're basically announcing that it does want to focus on AI and be one of the project that front run the whole narrative. And I do appreciate that. So if I'm going to get into a layer one that's going to basically specialize specialize in a narrative, and the AI narrative, for me, it's Near Protocol. Now, we do see Near Protocol retracing. It did come down to much lower levels. We noticed the lower lows and the lower highs, no doubt. We got the quick buy up into this level, and then we got the retracement to the upside. And guess what? After a retracement to the upside, eventually we start to see that the bears want a confirmation, or the bulls want the confirmation for that matter. In fact, the bulls, in order to get a reversal, we need the confirmation low, a higher low, double bottom, or something like that. What bothers me is that we're hunting liquidity right now. This is a very liquid level, a lot of volume, a lot of emotion, a lot of market participation in this level, which leads me to believe that we're going to have to battle these individuals out. And what we want to do is kind of get an indication of how many of these people are going to continue selling. You know what I mean? That we got a bit of a buy up, and then we're going to have a sell off. At what point do people stop selling and only buy, or lean towards, preferring accumulating and buying and accumulating? And that's the only time we're going to see that, is when we see the bears stop pushing down, where the price kind of make higher lows and so on and so forth. But right now we're still hunting that liquidity. We do have some empty volume gaps below. Keep in mind, I've been accumulating Near Protocol all into this level. There's videos to show you my whole strategy when I was in accumulation zone and accumulation mode. We definitely broke right through here. We back tested, bought the dip, nice green arrows showing you guys this is a great opportunity, and then continuation to the upside. And this is when I stopped about Near Protocol. This is when you don't talk about it anymore. You take your profits, you get defensive, and you walk away. That's the best scenario. You don't buy tops, you don't buy pumps and that kind of thing. Now all of a sudden we're coming back. We're coming back to previous levels of breakout zones, and this is usually where the majority of the liquidity is. So this is where we're at right now. How many people are going to be selling at these levels? Let's take a look at the momentum to see if the bears are showing any strength. We did get oversold a little bit, so I want to look at this in a bit of detail while still keeping the price in focus. So let's kind of rearrange ourselves here just a little bit, and we'll do something like that. And we can see that we got oversold, and then we didn't get overbought, and we got oversold again, making that lower low. Guys, that's unfortunate. It does look pretty bad. I get it. But ultimately, look at the expansions. Huge expansion here, smaller expansion, small expansion. Each time we come down for a lower low, our expansions are getting smaller and smaller. So the strength there in the expansions to the downside are not necessarily getting stronger as we come down, which means that the bears are showing weakness. The bears are going to have a hard time sustaining this move to the upside. And what I do like is that the trend oscillator is showing us that, maybe there's a bit of confusion, no doubt. Right into zone, we could definitely get a bit of confusion like this right into here, no doubt. Maybe we do roll over and come down for that lower low, but here on the daily, ultimately we're still in the bearish control zone. We are slowly making a higher low into this level, so I'm hoping that we do get the reversal. But guess what, guys? It's too early. I'm not very confident in here. I'm not very confident that I'm ready to deploy tons of capital now. Short-term trades on the 15-minute, on the 5-minute, those are all viable. I get it. Make sure you use risk management, make sure you put a stop loss in, all those kind of things. But ultimately what we're waiting for is that major reversal here. I think it's a little bit too early to deploy heavy capital on Near Protocol. So what we need to do is wait for the change of character. Structure, price action is king, guys. Oscillators are second rate. You wait for the price action, then use the oscillators as confluence. What I mean by that is right now we're making lower lows and lower highs, to the point that eventually people are going to start considering this being a descending wedge. And I'm going to, hypothetically put in a top, and hypothetically, we can probably drag this up a little bit, something like that, maybe bring it down. Okay, so we see a bit of a channel, downward sloping channel type of thing, little by little. Now, could we come down to this level? Why not? $3, next target, previous bottom. Maybe we get the bounce, maybe we don't. Do we get structure right here? Maybe we do, maybe we don't. There's no indication, there's no edge. It's a bit of a gamble. So what we want is something like this. If we do come down for a lower low, so be it. But what if we get a higher low or a double bottom? Great. That's a confirmation, a bit of a confirmation that we might be changing trend. Now we go for a higher high. Awesome. Higher highs and higher low all of a sudden in the local time frame. The big picture, what we need to do is break above here. That's what really needs to happen. So in the meantime, we could break trend. We can form a bit of a trend where we break, back test, and get up to here. This is what we really want to see, because ultimately, if we break this high and we come down, if we come down to back test it, guys, this thing is going to make a major move. right? Really, this could be the pivot point structure that we're waiting for when we start calling this head, shoulder, head, and shoulder, and then we start looking for the pivot. Now, this will take some time. Obviously, you can see this is the daily. Imagine waiting for daily candles. But just keep in mind that sometimes it doesn't have to happen that way. So full-on blown out structure. Sometimes a double bottom. Look at this. Nice double bottom, lower low in the price action, then huge move to the upside. What about if we do that right here? Boom, straight up. And then we consolidate back to straight up. When you get the volume, you get the FOMO, you get the market really strong into here, sometimes the recoveries don't take long. So we have to understand that until we see a higher high or a higher low, at least there's one introduction of a potential pivot point structure, a change of character. Guys, we're taking risk. So DCA slow, 10% at a time. That's about it. That's all I would do until I build that nice pivot point right into this level with Class A bullish divergence. And we saw that many of the oscillators, although the expansions are coming down slower and slower over time, not enough for me with regards to confluence to get into heavy bags just yet here on your protocol. Guys, DCA nice and slow. I'm a bullish on your protocol, but I'm waiting for that structural change before I deploy heavy bags. Let's move on. That's near protocol. Let's take a look at FET. FET, as I mentioned, did amalgamate. I'm wondering if this is the correct chart. Let's take a look at this chart for a second. See what's going on here. Still coming down, guys. Let it fall. Just let it fall. You don't want to be catching that falling knife. And that's one of the greatest things about price action, because price action gives you those horizontals. If we get into a structure, for example, this one, we had a nice horizontal level, right? We could have went bullish, but we went bearish. But at least here, you were able to kind of mitigate your losses. Put a stop loss underneath this. Put a stop loss underneath the consolidation. It was retractive, so you had a diagonal invalidation, fine. And obviously, you had the horizontal invalidation as well. If you invalidated yourself based on diagonal, you would have been better off. But nonetheless, still pretty good, because if you invalidated yourself here, you would have waited for the next structure, which would have been all the way down here with this double bottom. We got a bit of relief. Guess what? Another lower high. Guys, not a good look. Getting rejected below the 200 daily. Another dumpola all the way back down. So this is how you can track levels. Level to level, horizontal to horizontal. And if you look at the volume on the right hand side, there's nothing much happening here, guys. This is the fearful aspect of things, is that there's no resistance, no support, no basically emotions. There's nothing happening. And when there's nothing happening, guys, you can expect that the market is going to want to get to those levels where things are happening. And if you start coming down, you can see that this is where things happen here. We got lots of volume, and of course we're using the FET chart here, but there's lots of volume, lots of emotion, lots of levels of accumulation. Do we come down, maybe hunt liquidity, get that bounce, and get going to the upside? Again, another project, FET, that I would be waiting for a nice reversal right here, a nice scenario where we can see a pivot, an inverse type of head and shoulders, a W formation, or anything like that. But right now, we're making lower lows and lower highs on the daily. How can we get into lower time frames unless you're going to trade this structure? Again, if you're going to trade this structure, sure, you get onto the 4 hour, you zoom in, you put a stop loss underneath these bottoms, give yourself a bit of wiggle room for liquidity hunts, because we already got a bit of a hunt right here. We could come down for another hunt as we speak, right? Just keep in mind, you want to get in on the tip, about 79 cents, put a stop loss right below it, maybe at about 75, and then expect a little bit of a bounce and take profit, right below the 200 EMA on the 4 hour. Pretty much good setup, right? You could definitely do that. But just keep in mind, the trend is your friend. It's coming down, right? It's been coming down. So are we trying to trade the structural pivot point here? That's a tough one, guys. Just keep in mind that when we get these types of structures, this is the time where the majority of the market loses a lot of their profits, right? Or even their initial investment, because they're trying to time the market, that pivot, that big major reversal. And that's usually when people get risky, emotional, and that's where you want to, take it easy before we get all the little confirmations, or at least give us some confirmations and increase our position size as we build those confirmations. So again, another project that is bullish, a lot of people talking about it, but really no structure to suggest reversal on the daily just yet. So slow and steady. Guys, so far we covered two, and not giving us much of an indication of a reversal or strength of a reversal or anything like that. Let's take a look at Tau, another OG. Obviously, nice little dips, nice consolidation, horizontal levels respected. The wick kind of disrespected, but guess what? We closed that candle right above it. Got bought up real quick. Now we're coming down for another dip. We're testing these previous lows. Like, what do we do here? Really, risk to reward is not bad because of this, right? The horizontal is very clear. Bottom. That's a nice horizontal, but look at this shoulder. head, small shoulder. It's a bit exaggerated. Fine. We could definitely come down to about $100. That's very possible. We could break this neckline and come down very much so with a bit of volume. This buy up is quite interesting because that definitely looks like a swing failure pattern on lower time frames. You get on the 4-hour, you can see, came down, hunted some liquidity, came back up. Didn't really back test it, but still came back up. We could still back test it and not make a lower low and bounce right off the horizontal at about 200 and then get that bullish confirmation. That's still very viable. Like, there are a lot of options here because why? Because we're in a consolidation. We're basically going sideways a little bit here, and not a good look because we're going sideways below the 200 daily. So based on trend, we're below trend. We're in a bearish trend, obviously, clearly. We break above the 200 daily. We break above the previous high. We break above the structure. We break out bullish from this structure. Guys, things start looking really, really good for BitTensor. So what I would be doing here is this, is prepare. Prepare for the continuation of this consolidation, whether it be a symmetrical triangle, ascending. If it's descending, not a good look because it increases the probability of a breakdown. What I mean by a descending is that we keep on coming down here, making lower highs and keep on coming down. And if you connect the tops, sorry guys, that was sloppy. If you connect the tops, you'll see that it's pretty much descending triangular, which has a bias to the downside. So it's not a good look. Now, if we, kind of do the opposite where it's ascending, it's not bad because we start looking like we might break these necklines and might get that reversal, and that might not be bad either. But if we get inverse head and shoulders, cup and handles, Adam and Eves, it does look like we could get an inverse head and shoulder right into here, which would be great. Regardless, the breakout zone is the previous high. We need to break that high to change the character of the price action. And in addition to that, we can put a stop loss right below this horizontal, and that would be great as well. Another strategy is just DCA. And I would DCA in two spots, right here in the green arrow. Hopefully we get that bounce and we continue, right? Hopefully we retrace back there and we can get that entry filled, right? That's the bit of the FOMO that kicks in, right? People start saying, well, we might not come down there, so I'll buy now. And then all of a sudden it does come down there and their bags are in the negative, unfortunately, right? That would be a bit of a dip. Even coming down to that green arrow, you're looking at what, 30%, 25%? Yeah, 25%. And then all of a sudden we start breaking through the volume gap and things start to look really, really bad, because if we break through the volume gap, guess what? We're hunting liquidity from those early accumulators all the way down here. And then guess what? That's where the max pain comes in. A lot of pain comes in at these levels. So do we come down to that level? I would prepare for the worst. Prepare a portion of your portfolio, a portion of your bag to buy at 100. Put some buyers in there, and then of course right at this level at 200 might not be a bad idea also to accumulate. And if you don't have any skin in the game at this current moment, you're on the sidelines and you want to buy a little bit, guess what, guys? Even if you bought right now, even if it's a small portion, 20% of your portfolio that you're willing to allocate to BitTensor is not bad, because ultimately you're not buying the tops. If you look from the top, you're getting a huge discount at the current moment. You're talking about 65% discount. It's a decent discount, right? Think about it. It's a 65% discount. You're able to accumulate 65% more tokens. If it does come down, guys, congrats. You can buy more and accumulate more and hopefully get that reversal right around this area and then start moving to the upside. Guys, we're in an accumulation zone on some of these altcoins, liquidity at very critical levels. So that's Tau. And another one that, is pretty much at the same level as Tau is Render. Render has been doing very well. It migrated to Solana, identifying the value that the network offers, the speed, the transaction cost, of course, nice and low. But even Render has been taking a bit of a beating in the last little while. Render, it has been doing great. Nobody ever thought that Render would be coming back down to $4, guys. Render topped out at about 14, more or less. Render right now is at $4, back to levels of liquidity hunting. And I'm going to be very clear here. This is a new chart because they did change their ticker to Render, the full length of the word, right? And then all of a sudden, we start looking at liquidity levels. Let's look at this. Look at this high. Oh, look at all this volume. Very interesting zone. We hunt liquidity. We can hunt all this pocket of volume. All of this can be hunted, and we can go and hunt the liquidity and get these people selling on losses, breaking even, whatever the case may be. We want to be able to buy in people's losses, unfortunately, and that's how we can buy on the cheap. Now the question is what about now, right? If we exclude previous price action, things start to look a bit interesting, and you can see the volume profile adjusts based on the parameters that I provided. on the chart, right? You can see that this level was interesting. We're hunting this little bit of liquidity right now, and maybe respecting this little bottom right into here, which is not bad. I'm going to put a horizontal in here, but I'm going to put a white one just to kind of make it clear, like, this level's interesting. Do we hold above this zone, or do we break below this previous low? Guys, if we break below the previous low, we're coming down to hunt liquidity, and I'm curious to see is how many people are going to capitulate down here. And this is where we could get that rounded bottom. This is eventually where we can get that nice pivot point to the downside. So we do have some time here, and of course recoveries do come quick sometimes, but just prepare. And now what I'm saying is that we're still making lower lows, as you can see, in lower highs. We're still coming down. Eventually, we want some structure, something to suggest that we're getting the reversal. And as of now, there's nothing. We're still falling, guys. Unfortunately, every single project that we covered here at the moment on the daily is still looking like it wants to come down. And if you look at the oscillators, we're looking at oversold conditions. Still, many attempts. We finally got extremely oversold, which is a good sign. Because, of course, if you're looking to accumulate, these are usually the best places to buy the dip, is when you see the momentum extremely oversold. What's also interesting is as we make every impulse to the downside, look at the expansions. They're getting smaller and smaller. There's divergence happening there on the expansions. The expansions are looking weak every time we come down lower and lower. So what I would be doing is this. Wait for this volatility, the orange line, to come down to oversold conditions. From there, you might see the bearish response, see how much strength they have. If they make a lower low, guys, great. Made a lower low, fine. That's the name of the game. Lower lows and lower highs until proven otherwise. And then ultimately, you could go long here. You could go long and see how the bullish response. But just keep in mind, if we get overbought again and the bulls didn't make a higher high, get out. Get out, because then the bears are going to come in and potentially make another lower low. And then you can wash, rinse, repeat, and do that over and over until you catch that bottom. But you have to be diligent to get out when you see the price action or the volatility get overbought each time. And the volatility goes up and down really, really quickly. But ultimately, that's the way you can mitigate the losses if we come down and keep on making lower lows over time. Now, just keep in mind, once we get oversold on the momentum, the likelihood is that eventually we do get overbought and we start making a trend to the upside. And the magic really does happen when the momentum and the volatility are going in the same direction. So to show you what I mean, purple line, if it starts moving to the upside, okay, little by little, it gets overbought, and the volatility gets reset down here to oversold, upon the impulse to the upside with regards to volatility, it's going in the same direction as momentum. And that's usually when we get the bigger moves to the upside and the strength that we need to see a higher high or an explosive move where we start breaking out. Okay, so this is what I'm watching out for. Now, I do like the trend. The trend right now, EMAs are facing up, green histogram bars to the upside. However, in the last little while, hasn't been showing too much strength, which means that, look, is this a fake out? Look at the indecision here, straight up, straight down, straight up, straight down. Are we actually going to finally start moving to the upside? This is the risk you take right now. The trend oscillator is not giving you any edge, unfortunately. And right now, even the momentum oscillator is not really giving us too much of an edge, but it's not bad. It's potential there, right? So Render is another project right now that we've covered that is not really giving us too much of an edge. And the question is, what kind of risk do we take down here? Honestly, DCA nice and slow. I wouldn't be getting heavy yet. I'll be waiting to see when we start getting the structural confirmations into this bottom, when we do hit that bottom. Again, another one. AI narrative right now is not looking the greatest. Let's take a look at Akash. Akash, a lot of good dippers, nothing really interesting here. And I'm just going based on market cap and going on what people are talking about and what has been very popular in the last little while. Now, still has my artwork from maybe the live streams and all of that. Still making lower lows and lower highs, guys. We're coming down to this level. And what I don't like about Akash's price action is the volume. If you look at all these little nodes, these nodes can drive you nuts. And in fact, they can, make you incur a lot of losses. Just keep in mind, this was the accumulation range, right? This is where a lot of people got in on Akash. Akash at this level was very, very healthy. Nice, beautiful run up, double top. Not looking the greatest, a huge wick to the downside. You could be a blow off top type of scenario, and then all of a sudden coming down for lower lows and lower highs. Now we came one impulsive move, a retracement, and we're going down for another impulsive move, as can be seen. Now, where do we get that support? Now, if you look at the volume profile, and I'm going to stretch it out for a second, you can see that we got a node here, a volume, one over here, one over here, one over here. And every time we come in and look for support, we're looking at these nodes. And the reality is there's too many with small little volume gaps, little tiny volume gaps along the way. Which one do we trust? Trust none of them. Right? That's what I would do. I would trust none of them. I would just be waiting for the price action to give me that structure. Because if you can't trust the volume gaps, what else do you trust, right? It's all about statistical probability. If I'm not getting any conviction based on these nodes of volume, it's best to just wait and be patient and let the price action show you some sort of indication of a reversal. Now, we can get into the oscillators again, and we can see, look, we got overbought with a bullish response that didn't, oversold and oversold without with a bullish response that didn't get overbought. So you can see that we popped up and came right back down. We've done that before. Popped up, came back down, popped up, came back down. The bullish response didn't get oversold, overbought for a good while. We're due, guys. It's due for a breakout. If you look at what's happening here, from here to here, we've been trending to the downside very nicely and clearly. Okay, so this is something to keep an eye on. And if you look at the bottoms as well, we're slowly trending to the downside. However, this last move to the downside wasn't as strong, and you can see that based on the expansions as well. Look at this one. Look at this one. This one was stronger. Fine, we get it. This one, not as strong. Not as strong, and the momentum actually gives you that indication as well. So we're getting a bit of divergence. This is class A bullish divergence at the zone. Now, divergences are not the only thing you should be trading. It's very dangerous because you can get multiple drives of it, so be careful. And if you look at the trend oscillator, yeah, it's green histogram bars, EMAs are facing up, the expansion looks like it wants to get bullish, but are we done here? Is it rolling over? I'm a 50-50 at this point, but we have to understand, as long as we are not crossing over with red histogram bar, we're still okay. We're still okay, and we're slowly trending to the upside and maybe trying to get into the bullish control zone, which is above the 0 mark. We want to get above this, right? And so far, slow and steady, we could have definitely happened. So we got to keep an eye on this because it's looking pretty good, but you can see the indecision right into this, how it kind of looks indecisive. So just keep that, keep that in mind. Ultimately, back to price action, guys. Momentum is looking good and everything, but we want a structural change. So lower lows and lower highs. This could be the level where we get the support, right? But the previous highs has a higher likelihood, like right into here. We can see the reaction based on this wick, this quick buy up right into this level. So it's not bad of a confluent zone. And generally speaking, if the bears have enough strength to make that lower low, they have a volume gap really right below that can actually cause it to fall down to $1.25, which is also very possible. So again, there's no certainties here. Very low confluent charts today, looking at this narrative, which means that we got to be patient. We got to be patient and wait for something to give us a signal. It could happen quick V recoveries, things like that. But until we make a higher high or a higher low, guys, right now we're making lower lows and lower highs. So again, another one that's giving us the same analysis, the same thing. And usually the market moves in coordinates with one another, right? It's all about the sentiment of the narrative. Is the AI sentiment done right now? I feel like it's been very quiet, been overlooked for a good while. We had AI bots on Telegram and all of that, and I think that kind of stamped the peak. To me, that was not the greatest implementation of AI, personally speaking. And then we kind of had the Nvidia thing and all of that kind of like put a bit of interest, but really we need to see the price action factor in the bullishness, the actual fundamentals behind AI. So decentralized AI, in my opinion, is a good narrative, no doubt, but the price action right now is definitely coming down across the board. Slow and steady, we're getting into smaller market caps. Track, we're getting down to sub $50 million and things like that, which is starting to get into the micro cap zone. Once we hit under 50 million, I start to consider it a micro cap or a very small cap projects. And you can see the continuation to the sell-off, continuation to the downside, but you can see that we're slowly hitting levels. At least there's a difference between origin trail and Akash. The difference is that you can identify clearly emotional levels. This is the emotional level. What what we're hitting right now. The green arrow right now, this little volume gap, and then we have a massive empty space below. This empty space, if you introduce more price action, it's not going to be as empty. So we can focus on this volume gap first. Okay, and we can hope that this consolidation and this volume here, which is, you know, a moderate size of volume, acts as support. It could happen, right? We could happen, and we can build structure based off of that. Every time the bears push it down, you know, we get a wall. We get a wall, we get a wall, and eventually we consolidate. Every attempt gives us a piece of information to get a rounded, nice bottom, maybe an accumulation phase, maybe a bit of volume, and we start accumulating. But what if we start coming down even further? We have another empty volume gap right into here that starts to introduce a level of emotion unlike no other above. Okay, so we got to understand that this is the previous accumulation range where a lot of people accumulated for this impulsive move. And if they didn't take profit because they were greedy, guess what? The market's going to induce a bit of pain down here. And usually that's where the market tends to want to go, where there's the most pain. Now, is this enough pain? You know, one cluster here got wrecked. One cluster here getting wrecked. One cluster here maybe gets wrecked. After that, is that enough pain? Are we over? Are these people going to be spared? It could be possible, but until the price action gives us that signal, guys, prepare for the worst case scenario, which is that it comes down to about 28 cents. Now, if you look at momentum and all the trend oscillators, let's take a look. Again, another one that, guys, it's like all of this AI is working in tandem here. Hasn't gotten overbought on the daily for so long. Oversold, oversold, oversold. I've never seen such confluence from project to project, chart to chart in a good while. Like I don't think I've ever seen this, where I'm looking at already about 5 or 6 projects more, and where all of them momentum wise are bottomed out. Bottomed out, class C bullish divergence in the sense that we're making lower lows and the momentum is triple bottoming here. And can we trust this? At this point, statistically speaking, we're bound to get a bounce very soon. This expansion right here is very aggressive. This one is not as aggressive. Is it done? Most likely. This is class A bullish divergence, class C bullish divergence in the momentum. So there's a lot of good signs, but price action is still making lower lows and lower highs. That's the biggest issue. So again, structural change, we need that. What about the trend? Trend indecision all throughout this. No major expansions, no major clarity, nothing. We want something like this. Get into the bullish control zone, get into the bearish control zone. Go somewhere. Don't stay in the mid zone like this, you know, teetering, just like this with no volatility. With the momentum needs a direction. Give us a direction. So if you look at the momentum right now, it's kind of maybe giving us a direction. EMAs are crossing, green histogram bar to the upside, but do we trust it? Right? Do we trust the last time it happened and it came back down and then it came back down and up and down, up and down, up and down? Guys, one day we're going to have to trust it. One day you're going to see this thing expand. The thing is that, is it going to be this time? You can take a chance on each time it crosses up bullish, because statistically speaking, eventually we'll catch the bottom here. Eventually this will roll over. And from a price action perspective, it's not giving us that signal. So we have to really, take it really, with a grain of salt here. Do we actually reverse at this point? Honestly, I'll be waiting, guys. Another project that I feel like should just be, waited upon. You don't want to get into early. It looks like we could get a rounded bottom. Let's get a bottom first. Let's get some double bottoms at least. Let's get a W formation, and then we can probably get in with a bit more confidence, because right now, no way. You got to be very careful here. Origin Trail. I like the idea. I like a lot of these projects from a fundamental perspective, but I'm not willing to take these kind of chances. All right, so AGI is another one. Again, just because I say don't take chance doesn't mean that you can't buy none. You're getting a fat retracement across all of these charts. Look at this. Retracements everywhere. Retracements, deep retracement. Delysium is hitting the next target, the next bearish target that, I was anticipating. Like, look, falling through the volume gap. But guys, it's very probable. It's very likely that we come down to hunt liquidity at 6.3 cents. Right? Because where else do we go? Like, there's no volume in here for support unless, the market does create its own support here with a bit of structure like it did here. We put a stop loss underneath. If it breaks below, we take a hit. That's fine. We take it on the chin and we reaccumulate at the next structure. Or maybe this becomes a structure that reverses very close to the liquidity zone where the majority of the volume's at, down here where people accumulated out of this level. Guys, look at this, analysis right into here where we saw a lot of people buzzing. You got a nice bullish, symmetrical triangle. The expansion got it going, buy the dip, and keeps on going, guys. This is the way it works. You buy low and you sell high. All of a sudden, we're back to these levels again. We're back to the levels where people took risk. And this consolidation definitely went bearish, definitely. So we can actually, can we extend this whole thing? Probably not. Probably not. Oh, good. No worries. Like ultimately what we're looking for is another leg. And this looks like we got a 5-wave structure. 1, 2, 3, 4, 5. Yeah. As we complete the 5th wave, it's likely done. And then we go for a retracement, which is not good. Now, if we get a fifth, if this is considered a 5th wave, guys, it's not a good look because the 3rd wave is usually smaller. And then we get another 5th wave and come down even lower. Guys, that would be really, really, really bearish. I don't even want to go there, guys. I'm not an Elliott wave trader. I'm not the most, expert in the Elliott wave theories or anything like that, but when I see like things like this, and then what, just a retracement, a 3-wave to the upside, I'm not really crazy about that. I would rather have seen this be a 3-wave down and then a 5-wave up. But what do I know, guys? Ultimately, I see waves coming down, hitting horizontals, and obviously it's not a bad zone to start accumulating a little bit, given the fact that the momentum is very oversold here on the daily. 2 drives instead of 3, because usually we saw 3. We basically thought we were going to get a bounce here and get oversold, get overbought. But guess what? We came down to oversold conditions again. Like, geez, like how much more bearish can we be? The only bullish aspect of this is that this last expansion, right, is smaller than the previous, which is not bad at least. Okay, so that's pretty good. And we've seen a bit of divergence there, but is it enough to act upon? Absolutely not, guys. Absolutely not. 10%, that's it, because you're buying the dip, because it's a deep retracement, because you may not have any skin in the game. Look at the trend oscillator in the bearish control zone, potentially rolling over here and potentially coming down. Guys, very, very, very ugly price action right now for Delesium. Unfortunately, a lot of people like Delesium, but when this price action is looking like this, why will I be taking this kind of risk at this moment? I'm going to be patient. Patience usually gets rewarded, and obviously, it takes some time to experience the reward, and for you to believe that patience is something that is necessary in this market. Okay, so let's move on. I get another one. Nothing really interesting, guys. What am I actually showing you guys here tonight? I'm actually showing you the fact is that narrative by narrative, they also have sentiment. And there's also confluent projects by project. There's confluence here. That is not time really to get too heavy into AI yet. Yes, start your DCA, but not heavy. Let's take a look at Based. Guys, I have a bit of an issue with Based. And I'm not trying to, cause an argument with anybody that is bullish with Based. But I don't like a couple things about based on its fundamentals. I don't like that its involvement with Pepe, the OG Pepe, is so intertwined with its fundamentals. It's almost like Based AI was developed and created to improve the utility of Pepe. It's not the opposite, right? Based AI is almost like, it feels like without Pepe, Based AI is not going to exist. And I don't like those odds. I don't want to be putting myself in a scenario where I'm relying on a meme coin. Obviously, culturally speaking, Pepe has a very, very deep and old culture, old meaning based on the crypto in the meme culture. We have to understand it's one of the OGs out there, and I get it. I value that, but is it enough to start trading it and investing in it based on fundamentals, like actual traditional AI fundamentals, and integrating it into an ecosystem like that? Personally speaking, guys, I feel like that wouldn't be responsible of me, and I don't like that edge. And the way it looks, the way the structure of the project is revolves around Pepe bothers me. And to be honest, you can see the price action is not the greatest. We're making lower lows, we're dripping down, not looking the greatest. And there's many aspects about Based that I don't really like. Guys, I did do a deep dive. Check it out. Let me know what you think about Based with regards to fundamentals. It's very important to be critical in this space because, there's going to be a lot of people that, get interested, get invested into a project, and all of a sudden they ignore all the other things that they need to focus on. And I try to be very open-minded, right? Of course, if it's bullish, it's bullish. If it's bearish, it's bearish. And of course, a lot of what I say is my opinion. And opinions sometimes, obviously they're not fact. And I try to use the fact to really back up my opinions. And what I'm seeing here is a project that I'm not interested in from both price action and fundamentals. So I'm gonna have to move on here. Although I did put it on the list, I just felt like it was necessary for me to say this, is that when you're looking into a deep dive, or you're looking into a project and you want to do a deep dive and you want to know more about the fundamentals, it's very important to have a strategy. Are you going to be buying based on community only? Fine, that's a great fundamental approach, and based AI has that. Right, the community's there, right? It's very clear. Are you going to be buying based on tokenomics? Honestly, I don't appreciate the based AI tokenomics. It's pegged or involved with Pepe, a meme coin. I'm not all about that. Do I like meme coins? Of course, but I keep them in their lane. They're in their own category. I don't want to intertwine, meme coins with strong fundamentals and looking at a potential blue chip, let's say, and considering that Pepe is going to drive this blue chip project to the moon. I don't want to be that person that makes that correlation, and I choose strategically to do those deep dives and put categories. Community 100%, it's great, but the rest of it kind of bothers me, guys. Just kind of bothers me. Let me know what you think about based AI. I'm up for changing my mind. Of course, I'm always trying to be dynamic here to sway my opinion. It's very important to react based on the facts that are presented. But personally speaking, at the current moment, I'm not really interested. Let's move on. Let's take a look at Phala. PHAL. I do have a chart, I believe. Let's see. MEXC usually. Let's see what we got here on MEXC. And obviously, guys, if you're looking for an exchange, I do have a MEXC link, but also Blowfin, up and coming exchange, no KYC. I think it's a viable option, given the fact that we're seeing some pressure for KYC, kind of lightened up in the last little while. But I always like to have a few exchanges, centralized exchanges, under my belt, just in case, one doesn't suit my needs. For example, if MEXC one day requires KYC, I want an option. I don't want to just start, scrambling, looking for a new exchange. I have Blowfin as my backup, ready to go. In fact, I've been trading on Blowfin in the last little while, and everything is working out pretty good. So if you want to check it out, obviously, have it there, put a bit of capital, put a few trades in, see what it's like. If you like the infrastructure, if you like the overall, front end and all of that, it's obviously good if you have that in your under your belt, just in case we need to kind of pivot out of another exchange or whatever the case may be. All right, guys, let's move on here. Let's see what's going on with Phala. Risk to reward is still good. It's still good. I talked about risk to reward on Phala before, and the fact is that we're at range lows, bottoms. If you're gonna buy, now's the time. And the reason why is because, look, you know where to exit. You know where to say, you know what, is enough. I'm not taking any more risk here, right? If you bought up here, obviously you're feeling the pain. If you bought down here, your risk to reward is absolutely great. And I'm going to show you what I mean. Let me get rid of the oscillators, because at this point, the oscillators are not even that important. If you get in right now, right, and you start to ask yourself, how much am I willing to lose? It shouldn't be more than right around here. And I'm going to tighten this up in a second, okay? Because I feel like it's very valid to kind of look at this in a bit of detail here. If we trail it up a little bit, you want to give yourself a bit of wiggle room, fine. It's a 28% dip. I get it. It sounds like a lot, no doubt. Risk to reward is very important to understand that really you want to compare it with the reward. Now, I'm not talking about price discovery. Forget that. Let's be modest. Forget about all-time highs, price discovery. Let's forget about, some of the highs above. Let's talk about the first previous high. This one right here. We're not even talking about exceeding this high, making a higher high. We're talking about this high right here. If we get to this level, we're up already 300%. Okay, taking a risk of 28%. Risk to reward is almost 11-1. This is the type of setups that I appreciate. They're a bit of a punt because I get it. you're at very bearish price action, but this is where you can mitigate a lot of risk. Give yourself a bit of wiggle room. Just understand that this is a level where sometimes liquidity does get hunted, and we get those, stop hunts, liquidity hunts, basically swing failure patterns, comes down, hunts the liquidity, hits all those stop losses, comes back up, back tests, and springs to the upside, and then starts moving. And in the meantime, you had your position in, and in the meantime, your stop loss was hit, and in the meantime, you're out of the trade and you took a loss, and meanwhile, you could have been up significantly. Tell me that didn't happen to you. Let me know in the comment section below if that happened to you guys. I'm sure it did, because it happens all the time. This is the worst nightmare of a trader. But this means it's because this happens because usually you get in with too much and you're not giving it enough wiggle room. And the wiggle room is because, if you're getting with too much, meaning too much leverage or too much of a position size, you're trying to be very, very defensive. And usually where you're being defensive is where everybody else wants to be defensive. Okay, so just keep in mind, you want to start your trade off, very, very modest, and then slowly tighten it up and increase your position size as you potentially get that liquidity grab. Then it's over, and then you get the back test, you increase more capital, and then you trail up the stop loss, and then you have this bottom that was created as a confirmation low, a higher low, and as the spring off of the previous support that's respected as support once again, and then we start springing. So what you want to do is give your first initial setup a bit of wiggle room for that liquidity hunt, just in case it happens, but not too much, because if it starts to fall into dip discovery, you don't want to get wrecked. But guess what, guys? A lot of people have been talking about Fala, putting requests, DMing me about it, asking me to do deep dives about it. Guys, if you want me to do a deep dive on a particular project that you're interested in, you got to join the Discord and make the request, and I will definitely put it to a vote. We vote on every single deep dive that I do every Sunday, that I release every Sunday. We put it to a vote for the community, and that way we can decentralize the projects that I talk about here on the channel. I really do appreciate that. Let's take a look at Chlor. Another one that's a low market cap, okay? I don't remember the market cap itself, but I think it's about $25 million market cap at the current moment. It came down significantly as well. You can see the retracement. This is with TP, let's take profit. Now, okay, after we come down, could we potentially get support here? We didn't, so move on. Do we get support around here? We got a bit of a diamond pattern, and I remember saying this exactly. I might even have the videos. I don't know if I said it live or a pre-recorded video. Guys, I don't like diamond patterns. Never did. I don't trade diamond patterns. Why? Because they're whipsaw price action, straight up, or in this case, straight down, straight up. Both longs and shorts get wrecked. Everybody gets wrecked into diamond patterns. No, thank you. Move on. Then we come down, continue coming down. Where's the next level that I'm interested in? The previous low. Well, guess what? We're at that level and we fell below it. We try to get back above, rejection. So what do we do here, guys? If you got into blind orders, 10%, 10%, 10%, okay, fine. You're in 30% of your position. Your average position is right around here because you got in slowly, incrementally. Okay, that's fine. But we have to find the level of where we start to change direction, the change of character. And if we start zooming in, you start to see a level, many levels. I don't like when I see this. When I see the volume profile give me multiple nodes of volume, I don't know which one is going to hold up. There's not a clear level of horizontal support. There's not a clear emotional level that I'm interested in until we get to the absolute bottoms, guys, unfortunately. Right? This is where the majority of the liquidities needs to get hunted. This is where a lot of people got in early. Look at these entries, guys. We talked about this at this time. I have videos to prove it. Everything is all here. And this is the entry. This was the DCA zone where we should have taken the risk. This was the de-risking opportunity to trail up stop losses, maybe take 10% off the top and let the rest run. You know my strategy. I repeat it every single day. And then all of a sudden, guess what? We're back at that level. So what do we do here? We're back at the level, hunting that liquidity, that those initial investments, those initial positions, trying to see if these people will liquidate. Will we have enough bearish strength to get down to this level? As of now, we're making lower lows and lower highs. It's likely to continue there. I'm going to have to consider that that's a possibility, a good possibility, until proven otherwise. And the only thing that's going to change my mind at this current moment, look at this volume coming down. And we're actually getting a good amount of volume on the sell-off, guys. It's not looking good. The only thing that's going to change my mind is if we start changing the character of the structures, meaning making some higher highs and higher lows. And you know what I mean. Either the typical pattern is an inverse head and shoulder, but we need to see a break of trend where we start making a higher high of some sort and a higher low, and we start moving and we start looking at something like this. As of now, Chlori unfortunately is still coming down. Be patient, wait for the accumulation range. We want a floor price. We want some sideways. We want some structure where we can put a stop loss underneath and then get that bounce, whether it be an inverse head and shoulder, cup and handle, Adam and Eve, whatever it is. Give us something so that we can, get into a trade where we can mitigate our risk with a really healthy setup with risk reward ratios included, right? We need that. We need that. So Chlori, like the other guys, I went through every single chart right now, and they're pretty much all the same. Nothing is giving me any sense of bullishness on the daily with regards to AI. AI currently is probably the narrative that is most struggling, in my opinion. Let's take a look at Alif.im version 2 here. Let's see what's going on here. All right. Okay. A little bit better in the sense because we have some horizontal levels that are already touched and it retraced significantly already. This is the liquidity level. We're very close to it. I don't like one thing, and you guys know what I'm going to say. If you guys been studying and doing your research and practicing your TA and following along with me, guys, I try to give you learning lessons every single day. And you can see that when we break below horizontal supports, previous supports, and we then backtest them as resistance, guys, this is horrible. This is really, really bad. This is a sign of bearishness like no other. It's likely to continue unless it has a change of heart where we get above, back test the breakdown level and use it as support once again as it did in the past, and then spring off of it and start changing direction. That's the only way I will get bullish here, because as long as we see this thing below this horizontal, below 14 cents, guys, we're bearish. We're coming down, and who knows how low we're going to go. And this is why I'm saying we might come down to hunt this level right here, which is the majority of the liquidity where there's a lot of pain. And then maybe down here we get the reversal. Maybe down there we get the pivot point reversal that we need once we see signs that the bears cannot cause these individuals to sell. How many of these people below are going to sell? We need to see how much strength the bears have in them to cause that to happen. Right now, Alif.im also not looking the greatest, guys, unfortunately. Guys, we have to keep an eye on these narratives. Obviously, AI being a very, very interesting narrative in the last little while in this bullish cycle. We've been seeing, a lot of talk about AI being integrated in other projects, into layer ones, into gaming, into, deepen, and so much more. Obviously, we see AI can be used in many, many tech applications. However, guys, from a investment perspective, we're seeing, particularly today, we're seeing AI come down to much lower levels with no indication of a reversal, which is a very unfortunate thing, because a lot of us are looking for opportunities within this narrative and other narratives for that matter. However, patience is what's going to pay off. Okay, we got to be patient. And of course, I'm going to give you updates along the way. Whenever I do see an opportunity within any of these AI projects, I will definitely keep you guys posted with updates. Guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.